The 7 best stocks to buy for the reopening economy. Though the stock market can be a very strange place full of indecipherable fluctuations, sometimes huge events alter its landscape so thoroughly that big crashes occur. For example, take the case of the COVID-19 pandemic, which devastated so many businesses, both large and small. But now, after that dark period of time, things are finally starting to open up again. Stocks that were down bad are starting to rise and restore themselves. And so, in this video, we discuss the 7 stocks to buy for the reopening economy. You wouldn't want to miss out on the upsurge of profitability that's going around. Before we dive in though, please make sure to like, subscribe, and turn on our post notifications. These gestures go a long way to support the channel and make sure we keep coming at you with excellent content. To begin, what's all this fuss about a reopening economy? Well, as hinted at in the introduction, several businesses that were forced to close up shop due to the COVID-19 pandemic are finally ready to reopen. These include companies that relied on human presence to thrive, such as restaurants, airlines, movie theaters, and so on. Some of these businesses were forced to close down completely, but those that survived did so just barely. Now, with outside opening back up again, these businesses are sure to receive a boost. For most of them, though, the stock prices are at an all-time low, and this could turn out to be an opportunity for intelligent investors. And so, without further ado, we present to you the 7 best stocks to buy for the reopening economy. It would be hard to miss with these added to your portfolio. Number 1. AMC Entertainment Holdings. One of the businesses that was most devastated by the pandemic is the movie theater business. While streaming services took over, many feared cinema had finally encountered its demise. Even so, over a year later, it looks like theaters are getting back into business. Cinema-only releases such as A Quiet Place 2 are racking up revenue by the millions. Since AMC owns one of the largest theater chains in the country, it's clear to see how they will benefit from this movie-going resurgence. In addition, AMC has been the target of the shenanigans of traders on Reddit, who pump up the stock price in a bid to screw over short sellers. Shenanigans aside though, it's hard to go wrong with AMC, considering how things are looking up for the business. Number 2. Johnson & Johnson. Now, the pharmaceutical industry wasn't exactly devastated by the pandemic. In fact, quite the opposite occurred, since pharmaceutical giants like Pfizer and Moderna have seen a boost due to their vaccine production. Well, pre-pandemic, Johnson & Johnson was a premier value stock to buy, capable of racking up million after million in terms of revenue. All this good business has only been buttressed by the development of their own COVID-19 vaccine, which has avoided the bad press of the Pfizer and AstraZeneca variants. Number 3. Amazon. Similar to Johnson & Johnson, Amazon was not devastated by the pandemic, but was rather boosted. So much so that CEO Jeff Bezos regained his title of richest man in the world, even after a publicized divorce from his wife of many years, Mackenzie Scott. And this business boon only makes sense, seeing as the delivery business filled up the spaces left by the closing of so many other businesses. As the world returns to a new normal, there's no denying that Amazon will remain up, seeing the convenience it provides through its service. Number 4. CocaCola. With many public spaces closed, Coca-Cola sales suffered a lot. There were hardly any concerts or sports events to attract hundreds of thousands of thirsty fans. And so, low sales contributed to a low stock price, disappointing many shareholders. However, with concerts and sports events back on the menu, so is Coca-Cola. As a result, sales are rising and the stock price is sure to follow. Be sure to get in on this before it gets so high though. Regardless of this dip, several investors know the worth of Coca-Cola and will be eyeing it as its stock price ascends. Number 5. Boeing. Not to say there was a total grounding of all aircraft during the pandemic, but large aerospace companies such as Boeing definitely felt the impact on their commercial sector. With many countries closing their borders and ordering lockdowns, the tourism industry and all its adjuncts suffered. Now though, with freedom granted back to the public, people will be looking to refresh themselves with summer vacations. Boeing's planes will finally be back in business, as would their stock. Number 6. Chevron. Similar to the predicament with Boeing, oil and energy company Chevron saw a lack of demand during lockdowns devastate its business. With travel restrictions easing up though, people will be looking to travel and will be eager to fuel up their cars as they go on road trips and such. And as a result, the stock prices of oil and gas companies has risen steadily as the year has gone on. And this trend will hit a peak as the summer months arrive. And therefore, the best time to get in on Chevron stock is now. Number 7. Darden Restaurants. So many other restaurant chains could have made this list, but Darden is our particular choice. The dine-in business is a standout, with many brands under its belt, such as Olive Garden, Longhorn Steakhouse, Yard House, and the Capitol Grill. With a portfolio of over 1,800 restaurants, the company's stock is poised to rebound as customers return to in-house dining. So, as the summer holidays arrive, the best time to get into Darden stock is now. As usual, this list is far from exhaustive. Still, the businesses included stand the best chance at giving you value for money. There were a lot of reactionary panic sells made as the pandemic hit. Suppose you held on to your stock though, good for you. If not, well, it's not too late to get in on the action. In any case, so many businesses are about to go back in bloom now that the economy is reopening. Is there a company stock missing from this list that you would like to include? Conversely, is there a company present you disagree with? Please make sure to discuss this below. We'd love to hear your perspective. Signing off, we hope this video fulfilled your expectations. Before you go though, please remember to like, subscribe, share, and comment. These gestures allow us to know we're going in the right direction. That way, we know to keep coming at you with the amazing content. Till our next video, take care of yourself. It has been a pleasure. Catch you later.